Of course, one of the reasons why everyone is talking about SoundHound AI stock is because the company generated over 125% revenue growth in its most recently completed quarter. But what I want to talk about in this video are the underlying drivers that's lifting revenue for the company.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
SoundHound's management team revealed some insights into new deals that the company is signing. In the most recently completed quarter, they expanded throughout the German market and signed multiple deals with prominent two-wheeler companies based in the Indian market, as well as a multinational commercial fleet vehicle company based out of Italy that manufactures light, medium, and heavy vehicles, including trucks, vans, and buses. And there's really two primary categories where SoundHound AI is finding significant traction and early results, and that's in automotive and restaurant, quick service restaurants specifically. And these two categories I see as no-brainers, or I see as low-hanging fruit for the company to initially establish a beachhead. And from that point, we can see if the company can find success in broader business segments. But the restaurant and automotive industry, just because of the operations and the customer facing segments and all of the requirements to operate these businesses, it's a category that benefits SoundHound AI's technology. They highlight that they continue to work with 7 out of the 10 global financial institutions, with 3 buying additional services and 2 signing renewals. Now, with financial institutions, this is a more difficult category just because of the increasing regulatory requirements with financial institutions. There needs to be greater scrutiny in the large language model, in the communication. And so I don't see that as one market that's going to be easy for SoundHound AI to scale. But it's nice to see them gaining traction in this category as a potential third leg to drive revenue growth. They also signed a new enterprise technology deal with an organization supporting credit unions throughout the United States. They also signed a deal to deploy their AI ordering solutions with a nationally recognized full-service restaurant chain and had franchise wins with Firehouse Subs, Five Guys, and they're now fully rolled out in all Mod Pizza, Habit Grill, Red Lobster, and Torchy's Tacos locations, in addition to existing brands Chipotle and KC's. So as I mentioned, this category, restaurants, quick service restaurants, is one that I see its technology benefiting the restaurant industry significantly, especially with ordering, with AI ordering. I see this as something that lowers the cost to serve your customers and also improves the customer value. That ordering the drive-through window or however the order is coming in, it can be expensive to man that station with the person and train that individual. And then these are businesses where their employees, there's very high employee turnover. So if you're spending resources in training these individuals, and then these individuals are leaving and they're getting older and they're finding new careers and new job opportunities, you can't support yourself working at a fast food restaurant. And so it should be only an entry level job that eventually you grow out of and you get into a new category. And so you're wasting resources consistently training, updating training, and expanding. And if you can train, instead of training individuals, if you can train your artificial intelligence model and your AI agent, that agent can be with you forever. And you consistently upgrade that agent and improve that agent. And eventually that agent becomes better at serving your customers and at a lower cost, because you're removing one of the most significant costs when you're operating a restaurant, and that's human resources. Because there's such high turnover, it's not just the wage that you're paying your employees, it's also the cost of that whole process when somebody leaves to interview and process and onboard and train, and then to repeat that process over and over again. That's a significant cost for restaurants, and one of the reasons why some individuals might turn away from operating a restaurant. Many of these restaurants are franchisee operated, and if you make it more attractive for franchisees, more individuals would be interested in opening these locations. So earlier in the year, they introduced a new product called Voice Insights, targeting brands that require a precursor to full automation due to missing APIs and infrastructure. It's an AI powered solution that analyzes customer and employee interactions in real time in order to measure efficiency, satisfaction, and other metrics that can help restaurants improve their operations. In healthcare, they launched with a large precision medicine provider to pioneer an inbound and outbound agentic AI solution. And again, this is a category like financial services that I see as something that maybe in the future, SoundHound AI will gain broader adaptability. But for now, the increasing regulatory requirements for the healthcare industry, the financial industry, makes it difficult for artificial intelligence to gain traction, right? Artificial intelligence is known for hallucinations and making mistakes, and that's a category where you don't want to tolerate any level of mistake because the outcomes can be so devastatingly negative when there is a big mistake made. So this is a category more difficult to enter, but eventually it's an opportunity that they can capitalize if these models can improve to a level where their error rates are low enough to be tolerated by regulators and institutions that regulate these companies. So much of the interest that's driven is their unique approach to agentic AI. It's an agentic system designed for enterprises that balances the power of multi-agent orchestration and generative AI with essential business requirements and controls. While many internal AI projects stall in pilot phase, their approach consistently brings use cases to market within days or weeks rather than months. So their approach seems to be in favor with many enterprises, especially those in their core category, which is automotive and restaurants. And that's the area that I would like to see SoundHound focus more completely and really penetrate that market more deeply before they start to try and branch out into new business segments. Now, this business has excellent prospects in the long term, and as you've been watching this video, you might think that I'm bullish on this stock or that I have this stock rated as a buy, which I don't because of the valuation. I like the business's long-term prospects, but I don't like the current market price at $11.50. The fair value of this business I calculated is less than $6 at $5.72. So I wouldn't be buying this stock or rating this stock as a buy anywhere near the current market price level. Hey, if you value my process for researching stocks, I think you'll appreciate access to my spreadsheet containing my discounted cash flow valuations, which calculate a fair value for over 200 companies. It answers the question, what's a good price to pay for a certain stock? You can get access by joining our channel at the investor tier or above. See the link in the description or click the join button below to learn more.